Welcome, traders, to another Tickmill trading update with me, Patrick Munley. Want to update the SP500 view using the emini futures contract and identify some high probability action areas and price objectives for the trading week ahead. Before we jump into the technical picture, as always, want to just keep abreast of the market narrative, market dynamics. Over the weekend, Trump has essentially doubled down on the tariff situation, and China have then announced that they are in a position whereby they're going to initiate counter measures that will be pretty significant. 34%, I think, is the last number. When we look at the markets in and of themselves, pretty much the US indices now are either in corrective or bear market territory. Certainly the NASDAQ is in bear market territory, and with the gap down overnight, the SP500 came just shy. I think 17% was the peak of the losses overnight, and the market breadth is also in a bearish posture now. All reads approaching the oversold mark of pretty much 20% on the downside. SP500 components are trading below their 20-day moving average, and so it's a pretty grim picture to start the week, to be honest with you. However, we are finding a relief bid coming into the market now as we open up for US trading. In terms of the data slate this week, Wednesday sees the FOMC meeting minutes release. Kind of stale because obviously we heard from Powell on Friday. Then on Thursday we have CPI, and then on Friday we have PPI and Michigan consumer sentiment. And importantly, we also get the start of US earnings season with banks announcing, and JP Morgan kicked things off on Friday. It'll be interesting to listen to the commentary and what we can expect to hear from corporate CEOs with respect to the tariffs and the tariff implications on growth and sales. The VIX overnight printed a 60 handle and has since retreated from there, but we're still holding the gap in the VIX from Friday's close. And so whilst that remains in play, obviously volatility is elevated, and the potential for more losses are certainly on the table here. As we come into the week from a technical perspective, I'm actually looking for us now to test into the 78.6% retracement from those August lows seen last year, and that price level comes in at 45.63. We have the 161 extension from the initial pullback at 47.89, and we have weekly projected range support based on implied volatility from the options market coming at 47.47. So I would look for demand to develop in this area initially anyway, and certainly we can think about a retest and close the gap up towards the 51.30s. From there, I anticipate sellers to step in again, and this is where I think we can take another leg lower to test into this 45.60, 45.50 area. And we'll see then if buyers emerge from there, and we could get a more meaningful corrective move. Certainly, on a headline basis, if we start to hear that Trump is potentially walking back some of these tariffs, or there are positive negotiations with China, then I think then we can see a more meaningful bounce develop. But certainly at this stage, the corrective trend channel resistance coming in around the 42.85 area, it's going to be pretty tricky to overcome at this stage. And ultimately, what I'd be looking for is a move down to test into the pivotal support at the 41.50s. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.